has overridden selling. Now, if the price breaks through this level, odds are it's going to go lower. How do I know that? Because it held there once. It held all throughout October. So if it breaks through then, all the buying over here, all the buying right here is overwhelmed, which means there's got to be a good reason for traders to push it down. That's just the way the market works. Professional traders aren't going to act willy-nilly like most retail traders do. So the market trades sideways, boom, breaks through, and then continues its slide down. So it reacted to this support level, or reacted to this level as it did in the past by making a bounce, came back down, overcame all of the buying, and started to slide. Now, let's go ahead and fast forward to today. When the market gets into a situation where there's not really an overall direction, what I call a non-trend, also what I call the weave. When the market is in the weave, it means that the professional traders are not yet ready to commit to one side or the other. How do I know why do I call it the weave? Because you see here the moving averages start weaving in and out. They cross again very quickly, whereas inside of a trend, as you can see here, from the beginning of December all the way through the end of January, the moving averages were separated and had some good distance. If you notice here, in the beginning or the middle of November into December, look at this, 3 crosses, boom, boom, boom. And the market all through here had a lot of false breakouts, a lot of whipsaws. There was no real direction. It wasn't until the moving averages really separated and started going apart that you see a very good directional type of bias to the market. So as we move into this region here, I would anticipate more whipsaw trading, more false breakouts, simply because the moving averages have started into their weave. Now, if the market does break, I would expect it to come back up here, which is about 1.9900, or down here, which is about 1.9200, on a breakout one way or the other. I'm not really seeing any kind of patterns now. Let's go ahead and go down to the 1 hour bar. You can see here that the market for the most part today has gone sideways, just a very narrow, short hourly channel. Not a lot going on. No real patterns are presenting themselves. So now is not the time to jump in or try and manufacture a trade, or, heaven forbid, you're just sitting back and saying, man, I got to make some money, so let me go ahead and just enter a trade. Sit back, wait for the market to show its hand, take the best trades. Don't risk your money on iffy decisions or just willy-nilly in the market hoping to make some money. So let's keep our powder dry and wait for some patterns to set up.